Welcome, everyone. Let's get this started. I'm going to share my screen now. I'm excited to be with you all. Okay, here we go. All right, hopefully everyone should see that. Looks like it's working okay. So thanks everyone for joining. We're going to be talking about something most multifamily accounting teams have just gone through, Q1 close, and more specifically, why even well-run teams still feel strain after close and why that pattern keeps repeating each quarter. Okay. All right. So who is PABS, Pacific Accounting and Business Services? Well, very briefly on us, we are working with multifamily and student housing operators, extending in-house accounting teams. The focus is typically helping teams maintain reporting timelines and accuracy as portfolios grow or workloads spike without adding permanent headcount. As you can see, we've been in the business quite a while. We've won multiple awards, and we have a very strong team of professionals delivering. Okay, very briefly, just so you know who's speaking today, I lead commercial real estate here at Pacific. I have a background in multifamily and prop tech, including time at RealPage, one of the largest accounting software vendors. And Ankit, perhaps you'd like to introduce yourself.
Thank you so much, James. Hi, everyone. I'm Ankit. By qualification, I'm chartered accountant and working in service industry, especially in accounting outsourcing industry for last 17 years or so. I've spent quite a lot of years serving property managers in multifamily, build to rent, student housing, and senior living sector as well. I've worked with all shape and sizes of the firms, as small as 1,000 units with few properties, and as bigger as 100,000 plus units with 120 or 30 properties across the board. Thank you,
Thanks.
James.
Thanks. So obviously, Ankit will bring the operational lens to what we're discussing today. So just before we get started, I wanted to ask you, Ankit, across your 15 years in this industry, what do you see as the common drivers that lead CFOs, financial and accounting leadership to rethink their accounting function?
So, especially in this industry, what it really bothers to CFO is that from a scalability point of view, uh, constant firefighting, constant pressure in terms of the onboarding the new portfolios, making sure that they are ready for the next investor reporting, and making sure that their numbers are accurate. So the constant struggle in terms of the ups and downs in the property portfolio that keeps CFOs and their finance team on their toes. And I think that triggers for them to think about it, that what they can do differently to maintain the work-life balance and keeping their investors happy.
Well, thanks.
Now, James, as you've been speaking to a lot of leaders in this industry through the conferences, webinars, and you've been, you have a lot of connection in this industry. So what normally CFOs and finance leaders talk to you about when they are talking about their pains and talking about their problems, but do they really talk about that what may help them to solve their problems? I mean, in what direction they are thinking when it comes to solution?
Great question. So often they're focused on talent, they're focused on hiring and retention, but of course, like we have to wake up and smell the coffee. There are significant industry constraints around talent. Attraction and retention should never be the sole strategy. There's a shortage of accountants, and people are trying to lower operating costs. Um, and let's face it, hiring is very expensive, whether it's perm or temp resource.
Hmm.
Team members are expensive, and also it's difficult to get the perfect fit size team because the portfolio size and workload can fluctuate. So we recommend that the industry considers using a partner to allow that internal team to be extended with a flexible, scalable commercial real estate or multifamily accounting expert team. So then you have the best of both worlds, and it can be scaled up or scaled down depending on demand. Now, the world we're in, partner quality varies, partner strategy varies. Some are all about cost reduction. That's really all they're offering. However, others are about building strategic advantage, de-risking and owning the function also. So I think there's some different flavors there. So now, before we get started, just some questions to ask the audience, things to think about. Did your Q1 close take more effort than expected? Did you see financials go out later than planned? Did you see review cycles go back and forth? Uh, review cycles or more back and forth than usual? And were senior team members ever required to step in to fix or validate the numbers? And does this feel like deja vu? Ever seen this before? Does it happen every quarter? And would you consider yourself a reactive or proactive finance leader? So just before we go any further, we welcome any questions from the audience into the chat box, and we'll cover those at the end. Okay, so let's go on to the agenda for today. So we're going to be covering where teams still feel strained after the Q1 close, why we're just busy isn't the full story, why strain keeps happening each quarter, what strong proactive teams are doing differently, and where accounting operating models fall short, whether you're a pure internal team or you do have outsourced partner vendors too, and also a simple way to benchmark and assess your own setup. So let's get started with some industry statistics. So just to ground this in what's happening more broadly, we know that 45% of finance leaders cite a lack of skilled talent, and there's a 44% report of increased workloads from a very credible source there, Deloitte. So even before we get into the close, let's face it, teams are already stretched. Talent pipeline is continuing to shrink, and most finance teams are still spending the majority of time on processing rather than analysis. So let's face it, structurally, capacity is tight. There is an ongoing trend, of course, for firms to adopt offshore capacity to maintain their reporting timelines and quality. So let's talk about the pressure, what's on the surface level and beyond. So this doesn't just stay within accounting. When the close becomes inconsistent, we know that reporting delays slow down decisions, operational decisions, asset decisions, and confidence in numbers starts to drop. Investor and stakeholder expectations are always increasing, and we never want our teams to be operating with limited visibility. So at this point, it's becoming a control issue, not just a workload issue. And really, we're seeing growth outpacing the back office. So as portfolios grow, complexity increases often more quickly than the back office can scale. So that's more properties, more transactions, more coordination, and the processes are not evolving at the same pace, and teams feel stretched even without any major change. So common assumptions when people feel overwhelmed or stretched or busy, they're thinking that this is just volume, they're thinking timing, and it's a busy period. But if that were the full story, then just adding people would solve all this. So if it's not just the workload, what is it? What's the root cause? Is there a structural issue? Well, it comes down to how the work's set up, where rework is introduced, and how much depends on individuals. That is what's really driving the strain and driving the pressure. So where this is showing up in reality and in practice, when the close gets done, financials are delivered late or revised after distribution. Multiple review cycles before numbers are accepted. We have senior accountants validating work instead of reviewing exceptions or being able to focus on more strategic items, and also inconsistent close timelines across properties. So the close is getting done, but it's at a higher cost and higher effort than was planned. Now I'm going to hand back to Ankit.
Thank you so much, James. And look, when we think about that, when it starts happening, when you start getting to know that your team is in pain, So it starts even before the close. What happens that in the fourth week or third to fourth week, once you see that your quarter end is coming up, you want to keep on closing your books. I mean, you want to get your bank recs done, you want to make sure that your aging, the approvals are sorted, your T&E is sorted, your chargebacks are sorted. Now that is where a lot of things are stuck with other stakeholders. So sort of the workflows, the way it flows, there is a lot of dependency on other stakeholders. So when we think about it, this structure flow in the workflow, that creates the dependency. Uh, Side to side, the properties to property, there are a lot of exceptions. So the consistency in the processes are not there, which actually the burdens, or there is a cascading impact on the finance team, because then they will have to deal with each exceptions. And then that the issues. Which get surfaced at a very later on probably the last week or probably the first working day, second working day, that there are so many approvals are pending. I'm not able to close my books on a timely basis, and then everybody rush to close it. Then there is a compromise, quality is compromised, and then there is a sort of an impact on every other properties as well. So so mainly and there's a lot of example where this is repeatable issues, and that goes on month. Why? Because then there's no breathing space. You finish one cycle, you get on another cycle, and then you keep on facing those same issues again and again. So,
Okay.
right. And normally I've seen teams, right? And as James mentioned previously, that is just a timing issue. It's just that we are busy, or it is just a quarter end. But to be very honest, it's actually the way those processes are designed, the way the workload is being structured, and the way people collaborate and report those numbers. Now these are that really root causes which leads to this busy period, or it pertains to be a busy period, and it shouldn't be, because it's every month it's the same thing, every quarter is the same thing. Uh, so yeah, I mean there's lot to do than just saying that we are just too busy. So and if you think about it, right, many of the properties, as an operational guy, as an operational leader, I have really understood that a lot of things comes back from our counterpart, that okay, this is not done right, this is not done right. And when we really look at it, that what happened, so the root cause which I've spoken about previously, that the way those workflows designed, it just pile up things. Then there's too many dependencies on other stakeholders. Nobody is being accountable for their part of that workflow. It just piles up. Then finance team has no choice to finish the books in maybe calendar day 15 or calendar day 12, which we have promised to investors. So the quality gets compromised, and that is where it comes back that rework is required. Now once it starts, then it's a never ending story. uh, so yeah, these are the root causes when the reworks repeats over the period of time. And again I mentioned, right, previously, and then every CFO asks a same question, that why this happens every single time. We had dealt with this particular thing previously, why the processes are not fixed. But the real problem is that how the processes are designed. As a finance leader, are we really taking step back and think through the processes? Let me give you a one real life example which I have seen. We were managing a portfolio of about 70 properties. Every properties, the group properties were clustered into a groups, and every group was being handled by a different regional director. And every regional director had a very different methodology in terms of approving the bad dates, because writing off the bad dates will make their PNL look really bad. Now, just managing the way every regional director is approving the bad date, there was so much inconsistency in the bad date, right? So that's where we reached out to CFO, and then CFO took his time and really gave us a really a good framework to make it a consistently applied to each and every property, regardless of any exception. And then that's where problem solved. Based on that fundamental workflow, the bad date provision became just very simple, consistent, and with which CFO and the regional director can be vouched on. So as I'm keeping it simple, giving you a one example where many a times, if you really think about it, take a step back and focus on and the workflow and processes, then a lot of problems may go away.
Great.
Now, eh, we all have talked a lot about the processes, consistency, standardization, but I'm sure that every finance leader feels that they are still dependent on people, and that is a normal story which we come across when we partner with any multifamily property managers, management firm, or a student housing property management firms, that every finance team independent on their key people, and when those key people goes on leave, or if they are sick, or the new portfolios are being introduced, it's just, it breaks down, and then everything breaks down. There's a cascading impact. So yeah, relying heavily on individuals and not focusing on building the standardized processes, it's you are risking that entire finance reporting. Now, when we in previous slides, I've talked a lot about that what we have seen what we have seen in the industry is going wrong, where things are not working. But at the same time, there we have come across, or we have helped CFOs to build a very proactive team. And if we talk about the key fundamental pillars, that what the proactive team may look like, is that segregation of duties, breaking down your processes at a transactional level, which is controllable, measurable, and then there is a contingency built in those processes. Uh, Very important for your strategic senior leaders to have spare time so that they can help CFOs and VP of finance to uh, take more of a very valuable analytical role, or helping them to take ultimately a final reporting to investor, rather than getting those work done, or the rework done, or the sort of a review work, which normally happens all the time. And and proactively planning your next property onboardings. This is that every single time I have come across that, as a finance team, we've been told that, oh, we have 10 properties coming up. But did we really do the project planning? Did we really thought about it, that how we are going to review the books before we upload those books onto our Yardi platform, or the real page platform, right? Many a times nobody pays attention, and then at the end, when as a finance team, what you start with, it's a messy books, opening balances which are not tied up, and that ultimately builds up pressure. And at the end, as a CFO or VP finance, you will not be happy with your reporting, and at the end, your investors or the asset managers will not be happy. The numbers are not tying up. But what was the root cause? That we did not plan that property onboarding, and that importing those opening balances into our books. And finally, building the redundancy. We all come across those contingency plan, emergency situation, whether team members has gone off. There has been certain, audit, for example, right? Many a times audit comes during your quarter end. Does it mean that your quarter end will be delayed? No. I've never seen any asset management team accepting that, oh, I'm okay to accept final reporting delayed by 2 days. Never. So how do we plan those contingency in our quarter end reporting or a monthly reporting? It could be a people, it could be audit, or it could be a new property portfolio onboarding.
Okay, thank you. So if we think about accounting and the common operating model, this is where many fall short. So with internal only accounting teams, there's that consistency risk. Is there a built-in surge capacity for portfolio growth or times of imbalance of headcount versus workload? Commonly not. A generic outsourcing model, providers are selected due to low price instead of proof of ownership and optimization of the accounting function. So that creates in itself more review and rework because let's face it, cost savings often come with trade-off in quality or control. So the Pacific model is outsourcing to build strategic advantage. It's embedded, it's controlled, it's scalable, and we take the ownership. So here's a simple way for you to assess your current setup. So you can benchmark your close beyond just the output. So you're measuring effort, rework, and consistency, and you can benchmark that objectively versus another operating model. So how you could do that is very simply provide a sample set of properties to another vendor or if you're doing this internally, um, well, the first time you look at another vendor, ultimately, we just recommend that you're always testing. Test against your internal team, there's no perfect team, and evaluate your main provider. Always be testing. Also, stress test your process. What happens as volume increases or when key people are not available? Look and identify where your process breaks, delays, rework, and dependency points. And just think again about outsourcing. Cost savings alone doesn't necessarily remove strain, it just shifts it elsewhere. And everyone wants a strong setup with consistency, scalability, and control across the portfolio. So the strong proactive process enables, oh, in fact, I'm going to hand over to Ankit for this one.
Thank you so much, James. So ultimately, as a finance leader, what do we really want, right? A consistent and quality outputs, uh, quarter ends without delay, and obviously all the month ends as well, not only quarter ends. Making sure that rework is rework doesn't exist, or specifically it's a really exceptionally when there is something going on. Better visibility. I have seen CFOs not having their key KPI metrics in front of them. Not their fault. Maybe their finance team never thought about it, that what really matters for you. So creating those better visibility, not just a month-end close numbers, that has to be a key metrics for you to take a better decisions, and that makes you feel a little more confident in terms of your reporting, because as a finance leader, you will be in the courtroom to be answerable to your investors, right, for those difficult board meetings and reviewing the numbers, NOIs, cost per bed, cost per unit, etc. And ultimately, with once you have this consistency, quality, less rework, better visibility, better KPIs, and the confidence in your number, that same confidence will be passed back to your finance team. They will have a better work-life balance, and they will have some spare time to give you a little bit more value addition rather than just closing the books and making sure that bank rec ties up. So that's ultimately an end result that every leader deserves.
Okay, so what this means for you and your team, if the same issues repeat each quarter, the process isn't evolving, effort will keep increasing, and the pressure won't go away. So the opportunity is to address the structure, fix the root cause, and not just the workload. So let's talk about how we help. Well, before headcount changes and portfolio growth brings risk to capacity, and after, before and after, we're always available. We bring that flexible capacity that scales without adding permanent headcount. So we're often called in for routine day-to-day work as well as the best option for contingency planning when the inevitable surprise occurs. We also help by standardizing workflows across properties to reduce variation. And we reduce rework by introducing consistency early in the process, minimize dependency on individuals through defined processes, and ultimately enabling fast and more predictable close cycles. So this is all part of ownership, quality, and optimization with us as a partner. So to sum up what we covered today, we covered where the strain shows up after close, but the strain is constant because the issues are constant. It's structural. There's a root cause. It's not just workload. It's not just busy times. And this repeats because in most cases, the setup doesn't change. So strong, proactive teams are doing things differently to reduce rework and improve consistency. And we also spoke about the commonality of most current setups and where they fall short, and also how to benchmark objectively, how to assess your own process and identify what needs to change. So, if this is showing up in your environment, let's speak. We typically start with a short conversation to compare how your process is structured and where strains coming from. If we're going to talk about benchmarking, that's also an option too. And we're happy to do that with anyone who finds this relevant. And we can also share what we found as common hidden pitfalls and common best practices that we have obtained through the battle scars of many engagements and experiences. So happy to do that with anyone who finds this relevant. And here is my contact details, my email. Thanks, everyone. Appreciate your time and happy to take questions if there are any. Okay, it looks like we don't have any questions from the audience, so hopefully that means we did a great job and there's no complaints. It's been a pleasure being with you all. Thank you very much, Ankit. Thank you to the marketing team at Pacific who helped put this together. And we're looking forward to having conversations with attendees and reach out. We'd love to hear from you. Thanks, everyone.
Thank you, everyone. Bye bye.